A quick review on an old tech classic. I got my thoughts on Apple coming up. What's up everyone, welcome back to the channel. Thank you again for joining me. Today I just wanted to do an easy video on a stock that I have been a fan of for a long time as a consumer. I gotta admit, I'm not an investor. I'm kind of kicking myself not going in on this one a few years ago when I got interested in it, but nonetheless, I'm a big fan of this. I've been watching it and I feel like I was kind of wanting to do a new style of video, one that's a little less technical, a little more conversational, and I really thought I wanted to start it on a stock that I really like, which is Apple. So today I'm not gonna have a lot of technical analysis. I'll tone that down a bit, but I just wanted to talk about why I like Apple and I'm so bullish on it. I do have some reasoning. The other thing I'm gonna try to turn down is just like all the fanboyism that I am on it, because I do own a lot of Apple stuff. I've got the watch, all these videos I've made on my 2012 Apple MacBook. So I am into that environment. I do have a lot of their stuff, but I like working with it. Here it goes. So if you guys remember, Apple really got big over a decade ago when it introduced the iPod, which is a really popular music player or MP3 player that almost everybody owned some version of. At that time, the CEO of the company was the late Steve Jobs, and they transitioned actually from the iPod to the iPhone, which was essentially taking a smartphone, making it Apple, having the full touch screen, which was pretty novel, and then having the iPod functionality kind of built into it. And now again, Apple is transitioning from being primarily focused on the iPhone and going into other wearables as well as subscription services. iPhones and smartphones in general, the technology is kind of being saturated. I think it's been very smart for Apple to start looking at what the next product is. A lot of people were worried, how are they going to transition away from something that was so core to their business? But you got to remember, they transferred from MP3 players to phones. Apple's experienced in transferring from one type of product to another. So the wearables and services are hopefully, I'm thinking, something Apple wants to grow to kind of make up the gap in the sales that they're kind of losing. And that's been happening because people are really holding onto their smartphones longer. Before, every year a new version used to come out and it used to have a lot of new technology and made a big difference, and now it's kind of plateauing and people are holding onto their phones a little bit longer. Like, I've had my iPhone X since that came out and it's been a couple of years. And to be honest, each time the iPhone comes out, it's a little bit more expensive, which kind of makes people hold on to their older devices as well. Now, at the start of this whole, illness, my original concern with Apple would probably have been the fact that, well, of course the stores closed down, but they do have an online presence. They've been selling stuff online for years. But one thing that is really awesome about this Apple stores is when you can go in, you can touch and feel their products, and that is really where Apple shines. It's in their industrial design and the way that they kind of design all their products with all these little details. So I was really thinking, like, would sales be affected by the fact that people can't get into those stores as easily? They have to line up, they got to disinfect, they can't just go in and hold an iPhone, and they can't just go in and hold an iPad or hold a MacBook and feel how sleek and nice it is, which really kind of is part of Apple's way to make you buy stuff. So how did this affect sales? Well, I know I said I wasn't going to go into the technical analysis, but the Q2 report has the numbers. They've got an income of $11.3 billion on a revenue of $59.7 billion for Q3. Apple, by the way, refers to revenue as net sales in its report. So both net income and revenue rose during the quarter compared to the same 3-month period a year ago. Net income climbed 12% and revenue grew by 10.9%. Revenue for the products business grew 9.8% in Q3 and makes up 78% of Apple's total revenue. Among its products, iPhones were 44%, followed by Macs, which are 12%, iPads 11%, wearables were 11%, and services grew 14.8% to make up 22% of Apple's total revenue. So I'm gonna go through each one of those categories now in a little bit more detail, just to explain what Apple's plans are for each of those categories this year. And then I'm gonna throw kind of like the PE ratio of a competitor in each one of these segments so that I can conclude with why I think Apple is still kind of a good buy at this point. So first, let's talk about Macs. These laptops, desktop computers, they don't really talk too much about these products anymore in their presentations. They're kind of making up a small segment. They are sort of the bread and butter, but they're not really what's exciting about Apple these days. However, they have a lot of dedicated users like myself. It is important to note that the revenue did grow year over year in this segment, despite it being kind of like an older segment. And the biggest thing that I kind of saw in this area was that they're switching processors to one that Apple makes in-house. So they're switching from Intel processors to Apple processors. I was thinking about that transition and whether Apple could successfully transition away from Intel, in the sense that would people still be able to buy Macs and run software on them? And then I thought about it and I thought things are a lot different now than they were 10 or so years ago. At that time before, people were maybe going with Dells and maybe HPs and different PC brands, but now I think there's a huge or a much larger share of the home PC market, we'll call it, that is actually Mac. So people who build software are gonna make a Mac version so that people can work on that. So do I think they can make the transition? Yes, I think they have more pull now, and they've switched processors before, so they have a process to make this stuff work, to translate software, and they should be able to do this successfully. It won't be their first time. So one competitor in this segment would be Dell, and their P/E is 23.77, so a little bit lower than Apple. And maybe if you're looking into getting into PCs or in that market, you would want that. Dell's stock has been doing quite well this year, but there's more to Apple, so let's continue. Let's talk a little bit about iPads. So 11% of their total revenue, that is also a category that has gone up this year. They're introducing a new introductory 8th generation model, and it's upgrading to the new A12 processor. So they've got a new iPad Air, comes in some new colors and a USB-C connection. And I don't see the device really going to a lot of new customers. I really kind of feel iPads are, if you own an iPad now, you will just buy a new iPad whenever that iPad gets a few years old and you want something that's faster and better. I was kind of surprised to see that this segment was growing, because I don't really know a lot of people who bought iPads for the first time. Everyone I know who gets a new iPad usually had one before. But you know what? The sales are the sales. So that works. For a comparison on this one, I sort of compared to Microsoft because they build the Surface, and I thought that was its closest competitor. And Microsoft's P/E is 35.28, which is right there, just a little bit higher than Apple's. Okay, so now let's talk quickly about wearables and the Apple Watch. So this sector makes up 11% of the total revenue of Apple. It is up year over year. The segment also includes AirPods, which have been crazy successful, Beats headphones, and all those others, but I can't really break them down any further. So the newest Apple Watch, which is the Series 6, is going to have blood oxygen detection. But the more interesting thing as a stockholder is that they're coming out with an SE version, which is a little bit more basic, but still has the new processor. And they still maintain the Series 3, which is at $199. So they've got $199, $279, and $599. They've got price segments now, and the Apple Watch has been around for a few years, so you can even find them on Craigslist. And I've really noticed in the last 3 years that Apple Watches have become really popular. Like I've seen them almost on everyone, a lot of younger people, just because they're easier to get and a little bit cheaper now. So this is interesting. As an investor, you want to see more of these products being sold, more people wearing them. And one interesting thing that Apple is going for is actually marketing this a little bit towards, marketing it towards parents, but asking them or getting them to buy them for their kids. So they're attaching a new mode that you can set on your Apple Watch to give to your kids. And it has certain settings and security settings that they can't really get into everything, even a way that you can set it so that they're not distracted at school, but they market it towards parents as a way for them to know where their kids are at all times. So it's kind of like a way to get them used to the product and used to the brand at a very early age, sort of building that next generation of Mac users that will be very familiar with Apple. It's an interesting play. I don't know if it'll work. I don't know if I'm gonna fit my kid out with a $200 watch, but hey, you may as well try. I mean, crazier things have happened, like a $17,000 gold version of this watch in the first year. The closest competitor I could think of was Fitbit, but I couldn't get a PE ratio for them because they've actually had negative earnings since 2016, which is probably around when the Apple Watch started to get pretty popular. So would I prefer to invest in Apple or Fitbit? Based on that stat alone, I'm kind of leaning towards Apple. Okay, so let's get to the iPhone. It makes up 44% of the revenue for this company. Still a big major factor. Tim Cook doesn't really talk about the numbers as like a number of units it's selling, probably because iPhone sales in units has dropped, but they have increased the price to kind of make up for it. There is more to come on this device in October. They didn't actually have much to say about it in their presentation in September, and that is because COVID has kind of led to some supply chain issues. However, we can expect that this new model will have 5G capability, which should motivate a lot of people who've been holding on to their phones for a few years to get the new model, because it will be significantly faster than the old one. Another thing as an investor that I find interesting is that it's concentrating on some lower cost models. It's keeping like all the different price points in their iPhone lineup. And that'll help in efforts like what they're doing right now, which is to open new stores in new areas. Like they're opening their first online store to a market like India, for example. There's 1 billion people in India that now could order iPhones online, but it's important that those iPhones are a little bit more affordable. So Apple is still expanding and growing the market in that way, geographically, let's say, and getting into new markets. So there's still room to make more money in this segment. Biggest competitor here is maybe Samsung. However, they're only traded on the Korean stock exchange. I tried to find a PE ratio for them. It's about 18.11, which is actually quite competitive when you compare it to Apple. But some might say you look at something like Google, which is at 32.10, again, right in the ballpark with Apple. And I know that you guys are probably saying, well, you can't compare Google and Apple. They're totally different companies and do totally different things. And you're right, but I'm just kind of using these numbers again to justify at the end why I still think Apple is a stock to watch and something that you could possibly invest in, even at a high price to earnings ratio. Okay, finally, let's go to services. 22% of the total revenue came from services. This includes Apple Arcade, Apple TV, Apple Card, and I'm sure I'm missing some other ones. The biggest thing here, and again, as an investor, I find this really interesting, is they announced Apple Fitness Plus, which is actually kind of like a boutique fitness app. The thing I can think of that's the most similar to this is, I thought maybe Fitbit, but it's actually more something like Peloton. And I don't know if you guys know what Peloton is. It's like a bike that has a screen on it, it connects to the internet, and it sort of gamifies cycling exercises, and they have different trainers and different routines and different workouts that you can log into every day and try to finish and stay fit that way. It works for a lot of people. It's pretty popular, but pretty expensive. The unit, the bike itself, is over $1,000. Like, it does have a very high cost of entry. So what Apple Fitness does is it connects the Apple Watch to your Apple TV or to any screen on your iPad or iPhone. There are, again, trainers with set workouts that you can follow along, and all your stats, like your heart rate and everything, will show up on the screen, and it kind of guides you through a workout. It can do everything from yoga to HIIT training, cycling, running, and it'll add these workouts as it probably matures. But it's a very cool idea, and I really like the fact that they're building a service around one of its already existing products to sort of probably strengthen the sales and also convince consumers to pay another $10 a month for a subscription that they'll get, steady revenue every month from people just, doing workouts and keeping these subscriptions. So I really like how they're connecting the hardware with the software, with the services. I think Apple's if they move in that direction, we're gonna see more cool products and more cool services from them. Lastly, Apple included Apple One, which bundles their services together into one package for $30 a month, which could be very attractive if you're already into Apple TV and the Fitness Plus and whatever. As long as you've got 3 of the services, you may as well go for the bundle. So that's actually a smart move, I think, by them. Okay, so let's do the comparison here. Let's say you want to compare Apple Fitness to Peloton. Well, Peloton doesn't have positive earnings yet, so we couldn't do a good PE ratio comparison on that one. If you want to compare Apple TV Plus to a giant like Netflix, well, Netflix PE ratio right now, almost 80. Let's say you wanted to compare the music, Apple Music, to Spotify. Well, Spotify's PE ratio, 91.05. So both of those are a lot higher than Apple when it comes to the services side. So other than the Macs, Apple is either right in there or maybe has a more desirable PE ratio than some of its competitors, and it offers all of these different services, which is kind of nice and a nice convenient package. And I do think that they're going to grow the services side, which will be its most profitable side. If they continue to grow that, they'll continue to be really big and making a ton of money going into the future. So all of this, you've got the strong sales, the growth in every category, and these are huge good signs as an investor. And you couple that with kind of this environmentally responsible initiative that Apple has. They actually want to be carbon neutral by 2030. That's kind of the cherry on top for looking at a growing good company. That makes you feel good as an investor, at least me personally, if you can find a company that's really successful and values some of that stuff, or at least recognizes that some investors will be into some of this socially responsible aspects of the company. That's good. Now, socially responsible investing is the subject of whole ton of other videos, and I'm not saying we should be emotional about stuff when we invest. That's the last thing we should do. But if you can find companies that also align with your values, it's all the better. So when you look at it, Apple's got a really attractive tech package. They're growing in all their categories. They've got hardware. They're building out their services. They're looking at the next step. How do we keep the company profitable? So yeah, their P to E ratio is in the 30s and probably a little bit high, but when you compare Apple to its competitors in each one of the categories, it still makes up a pretty attractive package, and that's why I think it still would be a good investment, something that you can hold on to for a while and will still be profitable in the future. So that is my conclusion on Apple. I hope I wasn't too much of a fanboy when trying to make a unbiased opinion on this. If you guys like this style of analysis, please let me know. It's a little less technical, but I still kind of wanted to have a few numbers in there. And if you guys found this useful, please remember to subscribe, hit the like button, and share this video with your friends. Let's keep growing the channel. It's been really fun to make these for you, and I want to keep doing it. So until next time, have a great week, spread the wealth, and I'll see you in the next one. Bye.